Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at energy fuels.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so when you think about energy fuels, the typical take is pretty simple. It's a uranium stock.
Right. That's the old story.
But that's a really dated way of looking at it now, isn't it? This company is clearly trying to become something much bigger. We're talking about like a key supplier of critical minerals to the whole U.S.
That's the play. And they have this one single advantage, this moat, that is almost impossible for anyone else to replicate.
And what is that exactly?
It's all about geography and regulation. They own and operate the White Mesa Mill in Utah.
Okay.
And you have to think of that mill as like a fortress. It is the only, and I mean the only, operational conventional uranium mill in the United States. Full stop.
So if you're a domestic miner and you dig up uranium ore, you pretty much have to go through them.
You eventually end up at White Mesa. But, that's just controlling the infrastructure. It's what they're licensed to do there that really changes the game. It makes them relevant for the future of nuclear, not just its past.
Right.
Absolutely. Because White Mesa isn't just for basic yellowcake. It's a licensed facility that can produce something called high-assay, low-enriched uranium, HALEU.
And for anyone who's not deep in the nuclear space, why is HAU so important?
It's the fuel for the next generation of power, specifically for the small modular reactors, the SMRs.
The ones everyone sees as critical for the future of the grid.
Exactly. HALEU is just more concentrated. It packs more power into a smaller space, which is what those SMRs need to work.
So let's connect the dots here. The future of U.S. nuclear is SMRs. SMRs need HALEU, and Energy Fuels basically has the only domestic shop that can make it. That sounds like a massive tailwind.
It is, and this isn't some 10-year-out theory. They are cashing in on this right now. Yeah, their HALEU revenue nearly tripled year over year just in the first quarter of 2025. That's proof of concept. And on top of that, they've already signed long-term contracts with 3 different nuclear fuel vendors that are qualified by the Department of Energy.
That contractual part is so important for an investor, right? That takes some of the volatility out. You're not just riding the spot price.
Exactly. They've locked in premium pricing for their HALEU all the way through 2027. So what you have is a unique asset, a product that is critical for national security and guaranteed high margin revenue streams. That's a strong, strong foundation.
And that foundation is what's letting them make this really crucial pivot. They're not just sitting back as a uranium king. They're trying to become this diversified critical minerals powerhouse.
It's a very deliberate strategy, and it's all about de-risking the supply chain. I mean, look at the market for minerals used in things like batteries and magnets. China just dominates the processing.
And Washington is desperate to change that.
Yeah, desperate. So Energy Fuels is stepping right into that vacuum. They're using the existing licenses at White Mesa. That mill is already cleared to handle all sorts of complex materials.
So they're turning that one uranium mill into like a Swiss Army knife for critical minerals.
Yeah.
What are the big areas they're going after?
2 main areas. The first one, and I think the most exciting, is rare earth elements, REE.
Okay.
Their plan is to build out what they call the Phase 2 rare earth separations circuit. Again, right there at the White Mesa Mill. They're not going after everything. They're targeting the really high-value stuff for the battery and EV markets.
Okay, can you get more specific? Which rare earths are we talking about, and why should we care?
They're focusing on heavy rare earths like dysprosium and terbium and also NdPr oxides. And the reason you should care is pretty simple. You can't make high-performance permanent magnets without them.
And those magnets are in what?
They're absolutely essential for efficient electric vehicle motors and for the big wind turbines. So if you want to build out the energy transition, you need a stable Western supply of these specific elements. It's non-negotiable.
Okay, so that's the domestic high-tech angle. But the second part of their strategy, these heavy mineral sands, that seems more global.
That's right. The second leg of the stool is heavy mineral sands, or HMS, and that involves them going international, most importantly with the huge Donald project in Australia.
A project in Australia. Why there?
It's a resource that can last for decades. The goal isn't just about getting more minerals, it's about building resilience. Having a global asset like Donald gives them a consistent long-term revenue stream that's separate from the often wild swings in uranium and rare earth prices.
It smooths things out. Makes sense. You don't want to be tied to one commodity cycle. But building all this at a new circuit in Utah, a massive project in Australia, that sounds incredibly expensive. How did they get the money for all this?
They got it.
Yeah.
And they got it in a way that was, frankly, a massive vote of confidence from the market. Late last year, Q4 of 2025, they did a huge capital raise, a $700 million convertible senior note offering.
Wow, and the details on that deal were pretty amazing. It started out smaller, didn't it?
It did. The plan was for $550 million. But the demand from big institutions, we're talking a Goldman Sachs-led syndicate, was so intense that they upsized it to $700 million.
So the big money players were basically begging them to take more cash.
That's a good way to put it. They were saying, we believe in your plan so much, here's 27% more money than you even asked for. That's a huge stamp of approval.
And the interest rate on that debt was almost nothing.
It was incredible for a company in this sector. The coupon rate was just 0.75%.
0.75%.
I mean, for anyone listening, that's the interest they have to pay. To raise $700 million at a rate under 1%, it just tells you the market sees very little risk and massive upside. It's growth capital that's almost free.
So with that war chest, what does their balance sheet look like now?
As of November 2025, they were sitting on nearly $1 billion in working capital.
$1 billion.
$1 billion of dry powder ready to go. They have almost no other debt, so they have total flexibility. And that money is already earmarked. About $675 million of it is going straight into funding that REE expansion and developing the Donald project.
Okay, so let's zoom in on the next few months. If you're watching this stock, what are the key events coming up? What's happening inside the company?
Well, we've seen a few governance shifts. A director, Robert Kirkwood, resigned back in October. That's pretty normal. We're also seeing some ongoing insider sales on Form 4 filings.
Hold on. Insider selling. Shouldn't that make people nervous, especially right after they raised all that money?
It's a great question. You have to look at the context, though. The stock has run up a lot. So often what you're seeing is just executives rebalancing their own portfolios or exercising stock options. It's something to watch for sure.
But not necessarily a red flag.
Not necessarily. What's more important, I think, is how they're strengthening the team for what comes next.
You mean the new president, Russ Bapu?
Exactly. That appointment sends a really clear signal. The focus now is 100% on execution. Get those projects built on time and on budget.
All right, so what about the hard dates? What catalysts are on the calendar for this next quarter?
3 big things to watch. First, in December, we've got index and ETF rebalancing.
Okay.
So indices like the S&P and the big uranium ETF, they'll adjust their holdings. When that happens, all the passive funds that track them are forced to buy or sell stock. It creates a lot of volume and can give the stock a real boost if its weighting goes up.
And then comes earnings season.
Right. Second thing, Q4 and full year 2025 earnings should be out in January or early February 2026. The market is going to be watching everything, realized uranium prices, initial rare earth volumes, and especially the project timelines.
They want to see that the plan is on track.
Precisely. And the third thing, also in January, is the 13F filings.
The institutional shopping lists.
That's it. That's when we see which big funds, the hedge funds, the pension funds, have been buying in. We'll find out who really participated in that huge convertible note deal. It shows you where the smart money is moving.
Okay, beyond the confirmed stuff, what's the market chatter? Any speculative catalysts that could move the stock?
Yeah, there's always chatter. The big one right now is about potential new contracts from the U.S. government, maybe another DOE grant to, help secure that domestic supply chain.
That would be huge.
It would be. And then there's always the M&A angle. When you control a unique asset like the White Mesa Mill, you're always a target.
So speculation that a bigger fish might just buy them outright to get that infrastructure.
Exactly. A major global resource company could see buying energy fuels as the fastest way to control the entire U.S. critical mineral processing chain.
Let's pull this all together with the financials, because it's a bit of a tricky picture. They've got low costs, but they're not profitable yet.
Right, it's a classic growth story. On the one hand, their mining is really efficient. Their all-in cost for finished uranium is around $53 a pound, which gives them a healthy margin.
But they're spending so much on growth that it's wiping out any profit for now.
That's the key. The consensus forecast is for a GAAP loss for fiscal 2025, somewhere around 33 to 35 cents per share.
And a gap loss means they're burning cash.
They're burning cash, but they're burning it to build assets that will generate huge future revenues. That's the trade-off. You have to look past the 2025 loss and focus on the forecast for 2026.
And what does that look like?
It looks like a massive rebound. Analysts are projecting revenue growth of something like 85% year over year as these new projects come online. That's when you'll see those losses narrow really, really quickly.
And really quickly, what are the charts saying? The technical picture.
The technicals look pretty strong. It's in a long-term bullish trend, trading well above its 200-day moving average, which is a key sign of health.
And what are the key levels to watch?
You've got solid support down in the $12 to $13 range. That seems to be where buyers step in. And on the upside, resistance is up around $16 to $18, which lines up pretty well with where most analysts have their price targets.
Okay, so we've hit the assets, the funding, the strategy. Last question. What are the big risks here? What could go wrong?
The number one risk is execution. It just is. They are juggling so many things at once, the Erie expansion, the massive project in Australia. A project of that scale across different countries has a lot of potential for delays or cost overruns.
And the second risk is still just the price of the commodities themselves, right?
They're still tied to the commodity markets. A big crash in uranium or rare earth prices would definitely hurt. But, that's the whole point of the diversification strategy. It's the best defense they have against that exact risk.
So, to wrap it up, Energy Fuels is really pushing past its identity as just a uranium company. They're using that one-of-a-kind mill in Utah and that huge pile of cash to become a vertically integrated critical minerals supplier. It's a strategy that seems perfectly timed to catch these huge geopolitical tailwinds in both nuclear energy and rare earths over the next 1 to 2 years. If you enjoyed this analysis, please remember to subscribe, like, and share Smart Wealth with Joshua for your daily stock insights.